thank you so much for joining today's session. We really do value when people attend these sessions because we know you're all busy and taking time out of your day, especially during a lunch hour for many of you or early in the morning, we really do appreciate it. So during today's session, it's a little bit different than ones that we've done in the past. We're actually going to be comparing the two largest cities in Alberta, Calgary versus Edmonton, because this is a question that we are getting a lot. Where should I be putting my money? And we're going to help to dispel some of the myths and rumors and give you some of the facts and our personal insight into what we are continuing to do as well. So let's jump into the presentation now. So Edmonton versus Calgary. But before we get too detailed, let's take a minute to introduce ourselves. My name is Kyle DeVigi. I'm licensed in Ontario and Alberta to trade real estate. I've personally been investing in real estate for over a decade. And now I'm a landlord and owner of 6 properties, just about to add my 7th property as well. But I did not start out in real estate as a career. I previously used to manage Lotto 649 and Lotto Max on behalf of the large Canadian lotteries. You can actually see the lottery balls, over my shoulder back there. And this year alone, I've helped over 170 people to invest in primarily Calgary, but in the Alberta marketplace. And I've also been recognized this year in the RE/MAX Hall of Fame as well. But what claim of fame I like to have is that I turned one single deposit of about $38,500 into a multi-million-dollar portfolio. And I did the majority of this while I was still working my regular career, my regular day job. So it goes to show that this is possible for anyone. Anyone can become a condo millionaire or to build generational wealth through real estate. And we're all about transparency here at RE/MAX Wealth Builders as well. So this is what my actual portfolio looks like. I've got 5 condos and a house. And I've bought that over several years. I've tried to schedule them nice and laid out. COVID messed that up a little bit for me. So now I have 4 closings in a year, getting stressed about mortgages, but it is what it is. And I've done quite well. The demonstration of this, though, is the current market value. You can see at the bottom is about 4.4 million. But that is going to continue to grow every single year. And when we do our analysis, we just use 3% price growth. Very, very conservative. My actual annual return has been significantly higher than that. But just at 3%, you can see that 4.4 million growing to about 6 million in 10 years, 8 million in 20 years, and over $10 million in 30 years. When I'm looking to retire, I will have one heck of a nest egg available there because I don't have a pension plan. I'm not a government worker. I don't have that fortune. So I need to save and build wealth myself. And I have been able to do that through real estate. And now, Niesh.
Good afternoon, everyone. My name's Niesh, and I have been a licensed realtor since November of 2020. So literally 3 years ago, I got my license in hand. I was part of the 1% of realtors in 2021 and 2022. Hopefully 2023 will be the same. In terms of my real estate investment journey, my first property, my wife and I purchased that back in 2006. Back then, I did not look at real estate as a way to grow my wealth down the road. It was simply a place for us to live and grow some equity. Since then, I have added to that portfolio of one property. And today, including my family and my wife and I, we are owners of 9 properties in total, 7 of them being in the Calgary market. In 2022, this is really where I was able to scale my real estate portfolio. Not only did I purchase multiple properties in Calgary, but was quite successful as well in selling properties in Calgary to investors. Prior to my real estate career, I was in the corporate sector. I was there for 22 years. And Kyle alluded to COVID messing things up for him. Well, it messed things up for me as well, but more so on the professional side. The company and the business that I was a part of, unfortunately, we were not able to pivot when things shut down in 2020, and the type of business that we operated simply couldn't function when people couldn't go out and experience fun things. So that led to me transitioning to the real estate world. And thankfully, I started that journey before COVID started. And it actually turned out to be probably the best professional decision that I ever made. Once I started to get into the real estate world and really see how real estate could help me and my financial future, my son's financial future, and just being able to build generational wealth, I knew that I had to kind of pivot from how I looked at real estate initially, and I had to start investing. I had to start doing things that would help me build a pension fund, some way to take care of me and my family after I retired. I didn't have the fallback of a pension plan anymore because the company I worked with, they no longer exist. So all those things I had in place to help me down the road, they weren't there anymore. So investing in real estate, I was able to essentially quadruple my investment portfolio. And currently, I have a net worth of approximately $5 million. And there we go. We can switch over. What you're able to see, again, in terms of full transparency, you can see when the majority of these properties were purchased. It was after I transitioned into real estate. Today, it's worth just over $5 million, and applying the same principles Kyle alluded to, the annualized growth of 3%. In 10 years, it'll be worth just under $7 million. In 20 years, over $9 million. And again, keeping at that very conservative rate of 3%. In 30 years, it'll be worth $12.5 million. And the reason we use this 30-year number is because I have mortgages. I will have mortgages on all these properties, and tenants will be paying down the mortgages through their rent, which will then help me establish equity in these properties.
Exactly. And the thing to note is, not every single person needs to buy 6 properties, 9 properties. One single property can make a huge change in the amount of retirement savings, in your future plans. And it's achievable for just about anyone out there. So let's take a look into, step back. Remax Wealth Builders, we focus all on education. We want to help give you the information you need so that you can make an educated decision about what's the best fit for you and your family. And we have been really good at doing that. We've helped over 1,000 people from across Canada to invest in Calgary and Alberta since 2020. So just over the last 3 years, we've sold well over 300 million. Wasn't it like 450 million or something like that? So getting close, $500 million of real estate out west, which is pretty crazy. And our team has personally invested in over 20 Calgary pre-construction units out there as well. So we practice what we preach. We believe so strongly in what we're advertising and what we're talking about that we are putting our own money into it ourselves. And now let's dive into Edmonton versus Calgary.
Yeah, thanks, Kyle. So as I mentioned earlier, the way I was able to help my family scale their real estate portfolio was investing in Alberta. And when we looked at where we could invest in Alberta, Calgary seemed to be where we focused pretty much all of our efforts and our finances. And some of the reasons Calgary was preferred to us over Edmonton are the reasons we're going to highlight right now, I guess. So first of all, we're looking at the population. So Calgary has a larger population, of course, than Edmonton. You're looking at approximately, what is that? In percentage, about 13%. 1.6 million versus 1.14 million, 1.1418 million, whatever that number is. In terms of the average age, relatively the same age, but there are some other differences. The household income is higher in Calgary. So that's a 16% increase versus the average household income in Edmonton. And also the gross domestic product is also about $10 billion more than what Edmonton produces. All of that really accounts for the main reasons, actually. Some of the main reasons why people want to move to Calgary, other than the financial element, is because the quality of life so far, in terms of everything that we've tracked, Calgary has a much higher quality of life and has a higher livability rating. And that's been the case since 2018, almost the last 5 years. And looking at some of the data that we have access to, Calgary has been in the top 5 in terms of livability across the globe. In 2016 and 2017, they were voted the 5th most livable city to live in the world. Just last year, they were voted #1 in North America. And I believe over the last couple of years, they've been in the top 3 globally as well. There's many reasons why. It has a ton of sun. Not a lot of people know that Calgary has the most amount of sunshine hours across all major cities in Canada. Now, that's a big deal, right? Because sun, vitamin D, it all adds up to people being happier than living in a very gloomy city. I'm not mentioning any names, but we are happy to live in a gloomy city right now, but that's okay. Another financial component I think is worth talking about is Calgary is on pace to beat the Canadian average in terms of the GDP by 2%. So that's also a testament to the fact that Calgary is growing, but also growing for the right reasons.
Well said, Niesh. And I think a huge part of it too is if people in Calgary are making significantly more money, I think they would be quite a bit happier in general too.
Yeah, the cost of living is very similar. But if you're making more money, you can do more things with that money, which typically means you're going to be happier as a family and as an individual.
Now I changed this picture on you, Niesh.
Yeah, that's
to
okay.
demonstrate. I wanted a graph to show, and this is all over Alberta is what this is showing. But Niesh, if you wanted to dive into, Calgary versus Edmonton.
Yeah. So looking at the population growth now, looking at the last 20 years and maybe excluding the last 4 years or so, Calgary and Alberta have been, relatively on par, comparative, similar in terms of the population growth, but also in terms of the home prices and their increases. But something changed about 4 or 5 years ago. And really, this happened when there was a switch in the job diversification, which Kyle is going to talk about in a little bit, so I don't want to take his thunder. But when this happened, you saw a much higher uptick in the population growth in Calgary than in Edmonton. And if we take a look at the peak time, which was 2022, Calgary saw nearly a 30% increase compared to Edmonton. So that's a significant amount. It was already bigger, and it also saw a larger percentage in the increase than it did to its neighbor, Edmonton. One of the biggest takeaways that I got when I did our research, and we've been reading some of the material when we looked at Edmonton versus Calgary, is Edmonton didn't have a supply issue. So they had a ton of supply on the market. So as their population started to grow, that population was absorbed into the existing properties that were available. Unfortunately, Calgary did not have that same issue, or fortunately for us as investors, I guess you could say. So as the population started to grow, the supply kept going down, and now the supply situation has gotten to the point where it's probably the lowest it's been in recent history in Calgary. So this creates a supply and demand issue. It's simple economics, right? The higher the demand, the lower the supply, the higher the prices. So this is really what's causing the home prices in Calgary to go up. But in addition to the home prices, you're also seeing an uptick in the rental market, where there's fewer properties for people to buy. People need to rent. As the population grows, people need somewhere to stay, and the rental prices will go up because there's simply going to be more demand for those areas that people want to live in.
Absolutely. And that's what we're seeing is people are chasing the economic growth, the good opportunities, those good paying jobs. And Edmonton historically and to this day is more political based. I like to equate it to Edmonton is the Ottawa, of Ontario, where it's really the political industrial capital of the province. Whereas Calgary is much more business oriented, much more commercial, entrepreneurial. You're getting a much broader tech scene. That diversification of the economy that Niesh had mentioned is really happening in Calgary. And we're not seeing a ton of that happening in Edmonton. I can name a dozen companies that have set up in Calgary or are continuing to expand their operations there. Big companies, Amazon, TELUS, WestJet, Havilland Aircraft Manufacturing, tons of tech companies, Neo Financial. I can't name any for Edmonton. And I think that's the biggest thing, at least for me, is seeing where the money is coming from. Where are these huge international companies setting up operations? And it's Calgary. It is still Calgary, even to this day. And we've seen Calgary diversifying away from oil and gas. Yes, oil and gas is going to benefit both cities. It benefits Alberta in general. But Calgary is getting that economic growth that gets me really excited to be putting my money into that province. And you're seeing it across, all of the STEM fields: science, technology, education, mathematics, even finance, more and more and more in Calgary. In Edmonton, you're just not seeing that advancement overall. And Calgary is really becoming that destination. We've talked about this in so many of our webinars before, because it's a low-cost business environment, very highly educated workforce, very low cost of office space as well. But it's that incubator state, those startups that are coming there, that tech environment that is attracting more and more attention. Edmonton has a lot of those same benefits, but it doesn't have the tech scene that Calgary does. And in that previous slide, we had shown you record population growth in Alberta, but that is unequally being realized in Calgary. They're experiencing the major benefit of that. And I am seeing this firsthand. Just about everyone nowadays knows someone that's moving to Calgary, or is at least talking about it. About 1 in 5 of my phone calls are people considering moving to Calgary themselves personally. I'm not getting any of that for Edmonton, even though Edmonton is quite a bit cheaper than Calgary. And we're going to get into those numbers a little bit later. So like Niesh said, record migration coming into a city that's putting pressure on the housing supply, both on the rental and resale side of things. So you're seeing huge activity in the Calgary marketplace that you're just not seeing in Edmonton. Quality of life, both are fantastic cities. I would say that Calgary squeaks out Edmonton a little bit. You're closer to the Rocky Mountains. It's only about an hour and a half drive to Banff. It's about 4.5 hours from Edmonton. It's just not really doable. So Calgary kind of squeaks it out. Both are rapidly developing their downtown cores, trying to convert old office spaces into residential buildings to restore life and vitality into the commercial centers. But I think everywhere is experiencing that today as well. Even downtown Toronto, recently reading reports on that the office spaces just haven't returned to the previous occupancy rates that they had before. WeWork just declared bankruptcy as well. So this is a challenge that you're not just seeing in Alberta, but Edmonton and Calgary are taking actual steps to improve the downtown cores as well. So from that regard, I would say it's a tie. They're both doing a great job.
So before we get into some of the pricing comparisons, to dovetail what Kyle was talking about in terms of the economy and the diversification of the economy, Edmonton is, I guess, what you would call it gray collar, maybe. It's government jobs, healthcare, some financial, but also post-secondary positions. Compared to Calgary, the high-tech sector and the energy sector, those are scalable sectors. So you can exponentially grow those businesses, which is not possible with the jobs that are in place right now in Edmonton. So it's almost like a chicken and egg situation, right? You have the population growing, but the population is growing because the jobs are growing, but then the jobs are growing because the population is growing because more people want to come to Calgary to work. So this is why you're seeing such a low supply situation, even though Calgary is doing a really good job in building the supply up. They simply can't keep up with the demand. And that is really what's leading to some of the huge price discrepancies when we're looking at comparing Calgary to Edmonton. The population growth is creating the increase in both prices for home, but then also on the rental market. And looking at the average home prices in Calgary, I mean, you're looking at almost $150,000 difference in owning a home in Calgary versus um, versus Edmonton, and that's significant. And as we get into some of the different types of properties, we'll see that that percentage is actually not that far off from the overall average. This is a harder slide to see, so I'll be very quick in my description of the different prices. But when you're looking at a detached homes in Calgary and Edmonton, they weren't too far off, 5-7 years ago. Today, it's almost a $300,000, actually $250,000 difference. A detached home, the average price is $725,000 versus a detached price in Edmonton today, which is $486,000. Semi-detached homes, which are called duplexes outside of Ontario, it's almost double, right? And then townhomes as well, there's, triple-digit figures that are increasing in terms of the comparison, and the same with condos. Now, overall, the number of sales are going up in Calgary when you look at year-over-year numbers, but you're not seeing the same type of trends in Edmonton simply because there isn't a ton of supply. So homes can't resell or sell because, there aren't more homes for people to buy. So those numbers are what they are. But again, this is the average. The real key indicator here is when you look at the benchmark pricing, and the benchmark pricing, Kyle, I believe we have on the next slide. And there you go. So this is a slide. Actually, Kyle, I'm gonna have you take over this because I didn't get a chance to review these in detail. So I know you did. So I'm gonna pass this on to you.
Yeah. And the previous slide that we showed you with the average pricing, I think is a little bit deceiving. It doesn't give you the full picture because it's blending everything together. And simple shifts in which types of properties and the price points that those are selling at can easily skew those average numbers. So if you want to look at a pure apples and apples comparison, you want to look at the benchmark pricing, which tracks the same property type over time. So the average prices in Edmonton and Calgary, they were both up about 8 to 10%, which looks amazing, on the surface. Those are really good numbers. That's definitely a market that I would want to invest in. But when you look at the actual benchmark pricing, tracking that same product over time, you can see detached prices in Calgary up about 12%, whereas Edmonton, it's about 2%. Townhomes or row homes up 19% in Calgary. In Edmonton, 3.9%. Condos in Calgary up about 16%. Condos in Edmonton up about 2.5%. So you can see that Edmonton is definitely lagging from a price appreciation perspective. And I really think it's because of those migration factors that we talked about before. You have properties selling on average in about 30 days in Calgary. That is incredibly low. For some of the products like row houses, you have less than 1 month of supply in the entire marketplace. In Edmonton, it's over double those numbers, triple in some cases. So you're just not seeing the same activity in the Edmonton marketplace that you're seeing in the Calgary marketplace. Now, you can still see again, though, prices are significantly cheaper in Edmonton, but it doesn't necessarily mean that, it's good to be investing in because it's a low price. Penny stocks, they're a penny, and they're a penny for a good reason. Whereas, Tesla is over $100 a share. The actual price doesn't necessarily make a difference. It's why is there going to be appreciation? What's going to be the catalyst for that price growth in the future? And again, I see that in Calgary. You're seeing that month over month. They've had 10 consecutive months of price increases in Calgary across all the different property types. But you're going to say, yeah, it's more expensive. But you just recaptured the highs, especially for condos that were set back in 2014. So I still think you're buying at the lows overall. These were highs set a decade ago. And we can compare it to the other major cities. I think there's still huge room for prices to grow, both in Calgary and also in Edmonton as well. Now, Calgary is getting expensive in a relative basis. So you are going to see some people moving to Edmonton because of those prices getting out of the reach of a lot of Calgary buyers. And the areas in Calgary that are performing the best have been typically on the east side, so northeast, east, and southeast, because those were the most affordable areas. And high interest rates are affecting everyone. And they're getting to the point where some people just can't afford in Calgary anymore. So I think there will be a little bit of a benefit to Edmonton because of that overflow, so to speak. But I still see the core driver in Calgary, and you're seeing that reflected in the price growth.
Yeah, and getting
And
back to
then,
the overflow, Kyle, like
yeah,
that is what is absolutely one variable, but simply because of the affordability piece doesn't necessarily mean that that market is going to be sustainable, because people need jobs, they need high paying jobs, they need things to do, they need to have a certain quality of lifestyle that they want to enjoy. And until that catches up, and it very well might in the next 5 or 10 years, it's just we're simply not seeing the same activity in Edmonton that we are seeing in Calgary. And we may look back 10 years from now and look at Edmonton like we are looking at Calgary today. And today we're looking at Calgary like we would look at, say, Toronto in 2013 or 2012 or, 10, 12 years ago. So the potential is there, but we're just not seeing it just yet. And that's why when it comes to our investment dollars and where we are even asking our family members to invest out of those two cities in Alberta, Calgary is essentially where we have decided to focus our financial efforts.
yeah, and the rental numbers tell a story as well. Now, these are based on medians rent, which I don't love this statistic, but it was really good numbers to be able to compare. What's higher, what's 50% higher, and what's 50% lower. So in Calgary, one bed about 1840 a month, whereas in Edmonton it's about 1229. So a significant difference. You have seen very strong double digit, 20% plus price growth for a lot of the different bedroom types in both cities as well. So that's definitely a trend that as an investor, I want to continue to see. In Edmonton, it has been a lot weaker on the larger unit size. So Edmonton seems to be focusing more on that really, really affordable price range. Whereas, say, two bedrooms in Calgary up 25%, in Edmonton, just 15%. But that is a significant difference, especially if you're compounding that over time. Now, the biggest difference here, though, is Calgary's a slightly larger city, but the number of units available for rent is quite a bit lower for a lot of the different bedroom types as well. And that's going to tell me that you're going to continue to see strong price growth in the Calgary market, where in the Edmonton market, you could see it stalling a bit. In some of the property types, condos, larger units, especially on the high end housing end, you're seeing 60 days, 90 days, that sort of time frame to see properties renting and selling. So a little bit of weakness depending on the different property type that you're looking in Edmonton. Whereas in Calgary, it's still gangbusters. Everything is renting because there's a significant shortage of units available to rent. Again, because of that migration, because of that demand on housing. And eventually those renters need to buy as well, or eventually they want to buy. Normally they'll rent for a year and then transition into home ownership too. So I think you guys can see that we are still very bullish on the Calgary marketplace. If I have money to spend, I'm personally putting into Calgary today. I've seen great returns there, and I expect to continue to see great returns at least over the next 2 to 5 years. And that's why we want to present to you the Calgary opportunities.
Yeah, so definitely get in touch with either Kyle or myself if you have questions about any of the specific projects. But as a general overview, we have properties that are ranging from condos all the way to single family homes that have legal income suites in the basement. So there's many options at many different price points. We have closings that are next year all the way up until 2028. Now, beginning with the condos, we have suburban condos that are in the mid $300,000 range. They come with a 2-year rental guarantee, meaning that the developer will lease the unit back from you for 2 years, provide you with guaranteed rent for 2 years, and also manage those properties on your behalf. So essentially, it's a turnkey solution. You don't need to do anything. They come with a 10% down payment structure. Then pivoting to the downtown condos, we have a premier project called Imperia. It's smack dab in the Beltline, which is really where you want to be if you're downtown. You're minutes from the Saddle Dome and the Calgary Tower, steps from transit. So the most happening area in the downtown core. Also comes with a 2-year rental guarantee. and a very easy deposit structure, closes in 2028, has tremendous incentives, and they start in the high $400,000 range. And then we have townhomes. We have both freehold townhomes and condo townhomes. They're in the $500,000 range, also come with rental guarantees. We have townhomes that are closing next year in the first quarter. So if you want to move on something quick, you get it for a little cheaper than the ones that are closing in 2026. And then the single family homes that are ranging in the mid sixes all the way to the high sixes and low sevens if you want that income suite. And they close in 2025. So it gives you about a year and a half or so to really have the market do its thing and increase the value of the property that you're buying. Those have a 15% down payment structure, and both Kyle and I are happy to talk about each of those options in greater detail when you're ready.
Absolutely. Now, one thing that many phone calls I get today is, people are priced out of these prices even. They've got budgets up to $300,000. So Calgary now for pre-construction, that's out of reach for some people. So if you're in that case, Edmonton is an opportunity where you can invest for, 199,000 sort of level. And at that price point, I don't see how you lose. It just might not grow for the next 5 years either. Whereas Calgary, I definitely think that you are going to see strong appreciation. But again, we don't have crystal balls. We don't know. We're just telling you the facts, the data, and information so that you can make an educated decision. So we would love to chat with you more about what is the best fit for you and your family. So please get in touch. We're definitely going to be sending a recap of this webinar after the session. And if anyone has questions, we'll open up the floor now. So one question is, how do you compare a condo benchmark price of $316,000 to pre-construction condo prices? So I don't fully understand the question. Niesh, do you get it?
I'm wondering if the question is, how can you compare the benchmark of 316 to pre-construction condos that are selling at the $600,000 range?
Right. And that's where the benchmark is meant as tracking over time. Now, that is an older property, it's something that exists, whereas pre-construction is brand new. It always costs more, typically 20 to 25% more. And it's because you have to build using today's building materials and today's labor costs and today's financing costs as well. So that's why pre-construction is just always more expensive. Now, the nice part is it tends to retain that value as well. So the property that you're going to buy, number one, is going to be brand new when you eventually close on it, whereas the benchmark property, you could be talking about a 20-year-old property. So those are not apples to apples comparison. It's not going to rent the same. It's not going to sell for the same. You're not going to get the same quality tenant as well. So that's where we can help navigate this for you and determine, do the pre-construction condo prices make sense? And is there going to be good value for you as an investment?
And we still have condos in that mid $300,000 range. They simply aren't in the downtown core. And as to Kyle's point, the ones that are, in that higher range of 600,000, there's only a few of those, even in that Imperia building. It's because, they aren't 30 years old. The majority of the condos that are in Calgary outside of the last 5 years, they were built 20, 30 years ago. So they're not comparable in the sense that you're not going to get the same value out of them if you look to resell versus a property that's brand new, that has all the bells and whistles that people are looking for nowadays.
Yeah, exactly. Ricky, thank you for joining. So what is meant by benchmark pricing? So this is where the different real estate boards track an apples to apples comparison. So for condos, they're looking, and each of them define it differently, but they're looking at that same product over time. So it might be a 2-bed, 2-bath in the same area, tracking what's it selling for year over year, factoring in parking, locker, so that it is that true apples to apples comparison. Otherwise, I see people on Twitter doing this all the time when they're comparing the resale market and saying, oh, it's down 200,000. You're not comparing even the same house, not even the same housing type. That's where you to be able to effectively analyze pricing and what's happening, you have to be looking at that same consistent product over time. And that is different from the average, because the average is looking up, okay, what is the total property value sold divided by the number of units sold? It's just a blend of everything out there. In median as well, it's just looking at what's 50% higher, what's 50% lower, what's that middle number. So these are all just statistical analysis tools that people use. But the problem is they tend to use them interchangeably. Whereas I think the benchmark price is the best comparison price over time, because it can't be skewed. You're looking at that same property type through time. Now, next question. I have a builder's house closing next year in Calgary. It's detached. How much can I rent it for? Get in touch with us and we can do a good analysis for you to take a look at the numbers. Because again, that is such a broad question. We have to look at the area. We have to look, is it a semi? Is it a detached? What's the size of it? What's the location? What's the exposure? So much goes into looking at the rental numbers and the resale numbers as well, that we can't do an analysis without having more information for you. So get in touch and we'd be happy to chat more with you.
Yeah, we have teams out there that can help facilitate that as well. So definitely able to help in that category.
Next question. With today's high borrowing costs, do you see distressed assignments or buyer default sales in the Calgary pre-construction market yet? Yes, we are seeing this across Canada, much more heavily in the GTA market, especially for detached houses. It's an absolute dumpster fire for a lot of people there. I see people walking away from $300,000 deposits. We did not advise anyone to be buying those property types in the GTA. And my heart goes out to those people, because, a lot of those people are true distress sales. They cannot close on them. They have no options other than to walk away. And just so people know, you cannot just walk away from pre-construction purchase. You're still on the hook. So the developer will try to resell that property, and whatever they can get, if it's less than the purchase price, they can still legally come after you for it. Now, the nice part is, in Calgary, typically the developers are selling it for well above what those people paid. So you might be walking away from your deposit, but there's always better options available. And we've navigated clients through this now, where you can get short-term financing, because you're always better off to close on the property. And because there's virtually no closing costs, no transfer tax, no development charges, you can just put it on the market immediately and list it for sale. Because any assignments that I'm seeing in the Calgary marketplace right now are at least selling at 10% under the fair market value, which in a lot of cases is $30,000, $40,000, $50,000, because investors, they need a path to profit. They're not just going to do this out of the kindness of their heart. So to do that, they need to be incentivized. And you are seeing a significant discount on the values. So we're helping our clients get the most possible money. So buy, close on it, list it immediately for sale, because then it's not an investor, it's an end user, someone that's likely going to be living in the property who will pay you fair market value. But we are seeing it, just not to the extent that we are in the GTA. And it's mainly because people's situations have changed, job losses, deaths, life happens sometimes. So having that assignment clause is important to be in there, but there are other better options than selling it on assignment or defaulting on the unit. So if you're in that situation, definitely get in touch with us and we can help.
And one of the other main reasons, one of the main reasons that we don't see it anywhere near the amount that we're seeing it in other major cities is because the cost of purchase significantly lower. So many people are walking away from their deposits and defaulting on their payments in higher price markets, because those 2 or 3 percentage points in your interest rates will significantly increase your carrying cost. And if you were to buy one of those properties in these more expensive markets, you're not going to be able to maintain any amount of cash flow. You're going to be negative a few $1,000s a month compared to the rent that you're going to be able to get versus your mortgage. In Calgary, the prices are, as we know, much, much lower. So you may not be profiting as much. You might even be breaking even, but you're not going to be down thousands of dollars every month. So more people are closing on properties in Calgary and either selling them or holding them for a year and selling them after to not deal with the major tax implications. So there are a few, but we're not seeing it anywhere near as what we're seeing in other areas.
And next question, would you suggest residential versus commercial? So commercial is a completely different beast. And it's not for the average investor. You need to know what you're doing. You need to be actively managing that investment. So for the average person out there, I would strongly recommend going residential. And for the typical person, typically condos, I'd recommend because it's the easiest possible way to invest in real estate. But ultimately, it's up to personal preference and what each investor wants to do. So I've got clients that do want to do commercial and have done that in Calgary, but vast majority are going more the residential route.
And with commercial, it's probably very, very challenging to find pre-construction commercial. So you're essentially buying resale. So you will have to deal with the interest rates of when you're buying the property. So that can also be a bit of a challenge.
Yeah, great point. Very little pre-construction commercial available. All right, so that's the last question. Any other questions then before we wrap up? All right, doesn't look like it. So I wanted to say thank you everyone so much for joining the call today. I hope it provided some really good value and insight to everyone. And if you did have any further questions or wanted to book a call with us, please reach out. We're more than happy to do that because, again, we want to provide you the information you need so that you can make the best decision for you and your family. So please get in touch today.
Thank you, everyone. Appreciate you taking your time. Have a wonderful remainder to your week, and we hope to hear from you soon.
Bye, everyone. Take care.
Take care. Bye-bye.